first of all, I would like to tell you when it comes to taxation, there is no much difference between a sole trader and a partnership. Because end of the day, your taxation starts from the point where you will be for the tax point of view, it is all about whether you are a separate legal entity or a sole trader. Like your partnership profits will be considered as a sole trader's profits, and from that point onwards, it will be taxed like a sole trader's income. And now, most of the people who are wondering, who are not familiar with taxation and not familiar with business, their first question is, what is taxed and how much tax I have to pay? And everybody is scared that whatever I earn, I have to pay as a tax. But the taxation is start from the point where the taxable income. If you register a sole trader or a partnership or a company, your taxable income will be after all of your expenses, allowable expenses, and whatever the remaining amount. And normally taxation, it is really, you can't have the same, I can't give you a tax advice to a whole, congregation as the same, because it depends on your individual circumstances and what is your earning levels and what are the expenses you have underlying and what kind of a legal entity you are selecting as your tax point. Normally, as Lilan explained, if you register a sole trader or a company, let's look about the sources of income. Like in my presentation, I have put there are 4 sources of income that comes under the purview of the tax legislation. The first one is employment income. The second is the business income and the investment income and any other income. The reason I have pointed out these 4 sources is that if you are employed and if you have a business, normally, generally, in Sri Lanka, any individual will have a 500,000 rupees worth of tax-free allowance. If you are a normal resident and your first 500,000 of your income will not be taxed. That is your personal allowance. But if you are an employee of a company, and that allowance will go up to 1.2 million. So if you have a business as well as the employment, you should consider your employment income first. Up to the maximum of 1.2 million, you will get a tax exemption. From that point onwards, the business's income will come into play. And this is how you will be taxed on your business income. If your taxable income, after your personal allowance and all the other deductions, first 600,000 will be taxed at 4%, and the second 600,000 at 8%, like that, up to the maximum of 24%, and whatever exceeding 3 million will be taxed at 24%. And if you are a company, if you register SME or export or agricultural, educational service or any information technology services, I was highlighting this one for your reference, because the tax rate for a company who is in information technology services like software development and related businesses, your income will be taxed at only at 14% income tax rate. And this 14%, especially for software development. And if your income consists of foreign currency, there will be furthermore concessions, but your taxable income will be at 14%. And there are other taxes will come into play. If your income, if you register a company or sole trader, and if your liable turnover, if your revenue is exceeding 3 million a quarter, you have to register for VAT, NBT, as well as ESC. VAT, which is a value-added service tax, which can be claimed as an input tax. VAT is not really a cost to a company, but if your revenue is exceeding, you are legally supposed to register for VAT. In case if you don't register, if there is a VAT audit or anything on your business or your sole trader or your partnership, the VAT will be out of your pocket. That means that they will determine your revenue and they will say that is the VAT inclusive amount, and whatever the VAT pertaining to that revenue, you will have to bear out of your pocket and pay. You can't collect it because you are already invoiced to your customer. You can't again collect it from your customer. So you should be really mindful when your revenue is exceeding and when your business is growing. You should really know what are the other taxes you should be looking at and get registered. Especially VAT, since it is a tax which should be subjected to the end customer, and if you are not registered, this will be a huge impact on your business. And the NBT, which is called nation building tax, it is 2% of your turnover. This is also, you can collect it from your customer and settle to the IRT. But the rate is only at 2%. ESC, that is called economic service charge, that is paid 0.5% of your turnover. And if your liable turnover per quarter is exceeding 2.5 million. This is paid as a advance tax payment. This, whatever the ESC you paid, you can utilize against your income tax payments. And if there is any excess paid, that you can carry forward to the future tax payments for even sole traders, partnership, as well as companies. And Lilan, as Lilan explained already, what is the mechanism and how to get registered for tax and how to get a TIN number. But if you wanted to register for VAT, at the inception of your business, you can't register VAT or NBT, because since this is based on your turnover, you need to prove that your business will exceed these revenue thresholds in order to become eligible for VAT and NBT. That is why you have to be very careful that if you feel that within that year your income is exceeding these thresholds, it's better to communicate it to the IRD and tell them that, okay, I might exceed this limit, so register me. Otherwise, when you exceed and if there is an audit and if you don't put an application, you will end up paying penalties as well as the tax out of your pocket. You can't, like if you provide a service to Dialog, and if you have already registered for VAT, in your invoice you can include VAT and collect the VAT from Dialog and pay. But however, if you already generated your invoice, then that option is not available. So you are liable to pay the tax out of your pocket. And NBT also same scenario. And NBT is a deductible expense when you are calculating your income taxes. And especially the reason for me to be here now, since most of you are like service providers, based on the new Inland Revenue Act, the government has introduced a new Inland Revenue Act called number 24 of 2017, which came into force from 1st of April 2018. Under this Act, there are two new sections they have introduced, that is with section 84 and 85. The provisions were there, but those were only like subjected to foreign payments. But however, now this has been introduced to local payments as well, and especially Section 85. If you provide a service to a company, and if you are a sole trader or partnership, if the service income is exceeding 5%, 50,000 a month, there will be a withholding tax deducted from the company. Let's say if any of you provide a service to dial-up, and if you invoice 75,000, that the full amount of the invoice will be subjected to 5% withholding tax. This 5% withholding tax will be paid to the IRD on behalf of you or your business, and when you are paying your income taxes, that can be taken as a credit. But however, like in case if, if you are paying someone outside, and if there are services, you should be very careful that you also need to deduct this amount and pay. Otherwise, that tax will be borne by the company who will be paying the invoice. Therefore, it is very important to check Section 84 and 85 on when you are making some payments. And withholding tax, like return submission, if you see, if you are making a payment to a foreign party, if you make the payment within 15 days of the payment, you have to settle the withholding tax to the IRD. Otherwise, there will be a delay penalty on that payment. And each company or sole trader or a partnership, they will all have to submit an income tax return. Normally, the income tax return should be submitted by 30th of November every year for the year before. Like if your year if your year is from 2016 to 17, then the following November, after 9 months from your date of completion of the financial year, you have to make a return to the IRD with all the particulars of your income and expenses. And if you are if you are a sole trader and if your income is below 2-3 million, then you can provide your own accounts, or you can provide an audited financial statement for your income. IRD has about 3 years to come back and ask any questions. Until such time, you have to retain all your information, bank statements and the receipts, whatever the expenses you have claimed in your income tax returns. At least before 5 years, you can't dispose any of these things. If you dispose, what will happen is that the expenses you have claimed will be not deductible, and they will make that expense, as a revenue, and you'll end up paying taxes on that amount as well. And you should be, if you are having a sole trader or partnership agreement, withholding tax certificates, it's a very important document, since if you provide a service and if someone deducts some amount from your invoice, you should make sure that you have taken the withholding tax certificate, because with your income tax return, you have to submit these withholding tax certificates to IRD. When we deduct withholding tax from our suppliers, what we do is we submit that money which we have deducted to the Inland Revenue Authority under your name. Every year when people goes in their tax returns, when there are some withholding tax certificates, they will cross-check. After that only, you will get the credit against those income tax payments. Otherwise, if your withholding tax certificate is missing, you can't claim this credit and you will end up paying that money. That means it will be like double tax. And same time, I have given some rates of withholding tax in Sri Lanka. In here, the most special withholding tax rate for you all is for services is the royalty. If you like, Ilan said, if you register a trademark or some kind of a formula or something, that you can give it to another organization and earn royalty. And when you earn royalty, even for a resident person, now if they pay royalty, there will be a 14% tax deduction. And that is for that 14%, as I explained to you before, you need to get this withholding tax certificate in order to claim your withholding tax deducted amounts from the IRD. And these are the, under section 85, these items are identified as like service fee income, and one of the services is software developers. And even if a company paid to a software developer any amount more than 50,000 a month, that amount will be subjected to 5% withholding tax. For some payments, withholding tax is not applicable. I have given you as information slide only. Except these payments, all the other payments are withholding tax deductible. And I would like to just give you some advice with regards to if you are starting up a new business or something. Already Nilan has explained to you, if you register a company as a separate legal entity, there will be annual company registration levy. Except one of the main mistakes which has done by new startup or new services or sole traders, that they are not keeping proper records. Like they are keeping their personal bank account as their business account, and funds are coming in several ways. Because if you keep it like that, and if you are not organized, what will happen is, IRD is now really, they have implemented new systems to capture taxpayers into their net. And what will happen, they will take your bank details, and whatever the income or whatever the credit you have made to your bank, they will take it as your income. And they will assess your income tax based on that remittance. So it is very important to retain all your bills and invoices from whichever you have taken for your businesses, plus maintaining a separate bank account, so that you can, in an event there is a additional query from the IRD, that you can defend yourself, and you can explain what is the reason, and you can get the tax accordingly. And with this one, I would like to conclude my tax part, but as I explained you before, the tax, when it comes to tax, it is different to each person, and based on our circumstances and the way, what is the registrations we have done, and what are the revenue items what we have. So it is always best for a startup to think about the taxation part with their business strategy all the time. Because some startups, they totally forget about the taxation side completely, and once they grow it to some extent, they struggle to comply with the taxes, because initially they didn't factor into this information into their business. It is very important for you to, before you make any business decisions, to take the tax impact and how you are going to comply with the taxation, and what are the real requirements, and how to comply. You can easily go and get an advisor from anywhere, and it won't cost you much. And if you don't take these advices, what will happen is, in the future, when your business is somewhere running, up and running, you can't concentrate with your business and business development, because you have in your back of your mind there is an authority coming after you. Therefore, my advice is, like, part of your business plan, make the tax as one piece. And thanks a lot. If there is any query, you can ask me, I can answer. For any registrations or any tax rates or anything, if you, yeah.
I have a question that if somebody start as a sole proprietorship and then business start growing and then there's a point that they want to move forward to a company registration, at that point do they have to close it up and open as a new company, or is there any way that can simply migrate from that stage to a company?
No, you can migrate from that sole trader to a company if you have already registered trade name or some business name. You can make it as